Welcome to 30 Minutes with Averti Professional Managers webinar series. Our topic today is 2021 Tax Guide for SMEs by our Bookie Orekoya.
It's that time of the year where people make decisions on doing things right. And what's better thing to do than planning to do your taxes right this year? That starts us with the question, who pays taxes? Everyone who earns income must pay taxes. That includes businesses and individuals. It's funny to think that whether a business makes profit or not, they pay taxes. We'll talk about it later. However, exceptions are granted by law. What is taxation? It's a compulsory levy imposed by the government of a country on individuals and corporate entities. And for the Nigerian government, it's a major source of revenue. Tax planning should be a major activity of every business owner, as it may be a major cash flow, and defaults usually very costly. We look at the administration of taxes. In Nigeria, we have two main bodies. We have the Federal Inland Revenue Service, which is FRS in short, and then we have the State Internal Revenue Service. The local government authorities are also given some specific tax functions. Who you pay your taxes to depend on the incorporation status of your company or your business registration. For business name registrations, including partnership, they deal with the state's tax authorities. The incorporated companies pay to the Federal Inland Revenue Service. So what do we need to know? We need to know everything that deals with taxation as it affects our company. Know all the taxes your company are supposed to be paying, and then make a decision on how they're going to be paid on time. Before we go into this, there are some facts we need to know that will be very important for us to do our planning. Number one, all these taxes have known due dates for filing and payments. If you know your due dates, then compliance should be easier. Number two, delay attracts penalties, and the penalties can be quite punitive. The cash situation that led you to that delay in the first instance will be made much worse by the time the tax authorities are after you. So it's better not to delay. Taxes withheld by you, called withholding taxes, do not belong to you and should be immediately paid to the appropriate authorities before they are due. The same thing goes with VAT. VAT are actually paid to you by your clients for onward payments to the appropriate authorities. If you divert that for company use, it is sincerely stealing government's money. The tax authorities get wiser by the day, and they are training their staff on various methods to catch tax evaders. Any act of evasion is usually temporary. They catch up. The tax laws allow the authorities to go back 6 years in investigation and recover taxes not yet collected, obviously with penalties and interests. So how do we start off? How did you end your previous tax year? The fact that a new year has started does not mean that everything that happened last year is over. Tax liabilities, when not yet paid, can actually be negotiated with the tax authorities, and you pay within an acceptable time frame without penalties if the application is made on time. What you should not do is not take cognizance of the fact that you have unpaid taxes. Decide also to do everything right from the beginning of the new year and put plans in place to ensure this goes on. You need to know everything related to your company. It includes what should be done. And under this, you have registrations, you have the calculations, you have the filings. When should it be done? That's timing. How is it to be done? The relevant forms, formats, and processes. Who should do it? This is not something that can be left to anybody or to chance. You should have in-house responsibility accounting. Somebody must take responsibility for that function. To be able to plan adequately and do things right, proper books that will capture all the various tax liabilities as they occur must be in place. In this day and age, I will not advise anybody to be doing manual accounting, so computerized accounting is a must. We need also to separate companies' money from those collected in trust for government, like VAT. That does not mean you necessarily have to put them in a separate account, but you must understand that not every money in your bank account belongs to you. So any money that is not your own must be paid off immediately. And then don't get involved with unauthorized borrowing. We need to have a monthly cash flow system that highlights our liabilities, including taxes that are due for payment. And the guide to follow is, as soon as your creditor, your vendor, or your staff are paid, then the withholding tax or the payee on their payment is also already due. And so it must be scheduled at the same time. The best of us also occasionally suffer from short-term cash flow challenges. What to do at that time is to let your tax officer know your challenges. And here it is good to have a good relationship. Like I always tell people, at Averti, for example, our tax officer knows that we are always punctual with our payments. So when we have the odd 1 month, 2 months off, it's easy to let them know. And then, of course, as soon as the temporary cash flow situation is over, we pay the backlog and we are back to normal. We need to make use of a professional tax consultant. When I talk about a professional tax consultant, I'm talking about one who does things properly. Some tax consultants will show you shortcuts. Like I said before, they are only temporary. And at the time the tax officer catches up on you, the tax consultant may be nowhere to be found. And so, if you don't have an experienced accountant, it's good to use a consultant because the amount you save by not using one will be small compared to how much you have to pay as penalties to the government. So never accept shortcuts because they never pay in the long run. And then we need to know the difference between tax avoidance and tax evasion. Tax avoidance is using the lawful method to reduce your tax outlay, the amount you need to pay, while tax evasion is deliberately not paying taxes you know you have to pay. Never evade taxes. So we need to start with knowing your taxes. There are 7 types of taxation, although we're going to be dealing with the first 6 for SMEs, because the petroleum profit tax usually is for much larger companies. We have the company's income tax, the withholding taxes, the value-added tax, education tax, capital gains tax, personal income tax, and like I said, petroleum profit tax. We'll be dealing with what it is, how they're calculated, and the time frame, very, very important for payment so that it can be planned. Company income tax. All companies are subjected to tax based on the profit of the trade. The profit is calculated as all income less all allowable expenses incurred in earning the income. What do you mean by allowable expenses? In taxation, tax expenses must be wholly, exclusively, reasonably, and necessarily incurred. The implication of this is that sometimes it is not all of your expenses the tax authorities allows you. So when incurring expenses, ensure they are of the nature that you can actually convince your tax authorities that they were used wholly, exclusively, reasonably, and necessarily for the business. Tax rate is 30% of the assessable profits. Some technical adjustments are made before you get the assessable profit. And then capital allowances are granted to replace depreciation, which is disallowed. Now, filing. You are given 6 months after the end of the financial year to pay your taxes, to file your taxes and to pay. In which case, if your financial year end is December, by end of June, your taxes should be paid. Any withholding tax certificates you have can be used to offset the tax that has been assessed for the year. There are some exceptions given for company tax, ecclesiastical, charitable companies, friendly societies, trade unions, companies registered by state governments are all included. But very important for SMEs are companies granted pioneer status. If you are granted pioneer status, you don't pay taxes. The good news is in the 2020 Finance Act, SMEs engaged in primary agricultural production may be granted pioneer status for an initial period of 4 years and additional 2 years. Lastly, SMEs with income of 25 million or below, according to the 2020 Finance Act, are now exempted from company tax. This is good news indeed. Like I said earlier, all companies pay tax. For example, once you are registered, even when you have not started company, for the first year of registration that you have not started company, you pay 20,000 naira as tax. Subsequent years, you pay 25,000. Somebody may want to ask me, what happens when a company incurs a loss? They still pay something based on computation of minimum tax. The computation currently is 0.25% of the turnover of the company for the period. This also was just reduced in the recent Finance Bill 2020. Some other companies are granted exemptions from paying taxes when they incur losses. There are companies in the agricultural sector, companies with at least 25% imported equity capital, and companies within the first 4 calendar years of commencement of business if they are making a loss. So there is a period of 4 years which you make a loss when you have just started, that you may be exempted from paying taxes. When all the taxes have been paid, then you can apply for a tax clearance certificate. They will want to make sure that you show evidence that you have paid your VAT and your withholding tax for the previous 3 years before a tax clearance certificate is awarded to you. The second one is withholding taxes, and this is an advance payment of income tax which can be used to offset future tax liability of a taxpayer. The implication is this: all your customers should deduct from income that is due to you. You must also deduct from all your vendors and remit same to the tax authorities. A word of advice here: when your customers deduct, please ensure you follow up to ensure that they have remitted to the tax authorities, or else you will not be given that refund. The filing of returns for withholding taxes is 30 days after the end of the month of deduction. There are various rates for companies and for individuals for withholding taxes. This will show on your screen so you can keep up to date on it. It varies between 5% and 10% depending on various activities. The third type of tax is value-added tax, and is a consumption tax of 7.5% payable on goods and services consumed by any person, whether government agencies, business organizations, or individual. It's an indirect tax borne by the final consumer, and the tax is collected on behalf of government. The tax does not belong to the person collected, and so must be paid over immediately. Companies are required to be registered for VAT within 6 months of starting business. That's very, very important. And there is also a rule, a law, that VAT should be clearly stated on the invoice and not merged with the sales value of the product as VAT inclusive, as some companies tend to do. This is wrong. When are the filings expected? Within 21 days of the month following the month of transaction. There's some exemption granted to VAT. medical, pharmaceutical goods, basic food items, books and educational products, baby products, agricultural and veterinary items, water treatments, chemicals, etc. Please note that exemption from VAT does not include filing. Nil returns should be filed monthly even when you are exempted from paying taxes. We also now have the number 4, education tax is 2% of your assessable profits for all companies, and is a social obligation by companies to improve the standard of education facilities in the country. Number 5 is capital gains tax. Is tax charged on capital gains accruing to a company making a chargeable disposal of assets. The rate is 10% of capital gains. For example, you buy an asset for $1 million. After 5 years, you sell it for maybe 2 million because it has appreciated in value. You pay 10% of the difference as capital gains. And the last one we're going to look at is personal income tax. PIT, or pay as you earn, is a method of collecting income tax from employee salaries through a deduction at source by an employer. It's administered by the State Board of Internal Revenue, where the staff resides, and all income types and allowances are covered. The filing is due within 10 days after the month of deduction. And at the end of the year, returns should be submitted with tax deduction cards and evidence of payment, not later than the last day of January of the following year. For that, please note, end of this month, the year returns are already due. So if nothing, please make sure you are up to date. Personal income tax involves not only tax from employment, but taxes from trade or business profession, rental income, pension charge, any profit not in the preceding year. And we have some non-taxation income and deductions that needs to be deducted before you decide on the tax for the year. You have, for people earning less than 360,000 naira per annum, they are exempted, totally exempted from tax. Medical expenses reimbursement is exempted. Meal vouchers, protective clothing and uniform, compensation for loss of office, and gratuities, 10 million and below are exempted. And you have some deductions like the national housing, national health insurance, life assurance, national pension scheme that are exempted from tax. Now that we've covered all of the taxes and we know the due dates, the thing to do is to ensure that we take cognizance of those due dates and we ensure that our taxes are paid as at when due, in the right proportion, in the right format, to ensure that we are on the right side of the law in 2021. Wishing you all the best. Thank you.